What's up, guys? Sam here, and I'll be doing the free video for Friday, April 5th, 2024. So another week is in the books. Kind of boring until it wasn't, and then it got quite eventful starting yesterday, and then a little bit of follow through today. So, unlike the past number of videos that we've made during this entire run, we're actually starting to see a little bit of a change here. And I just finished making the premium video for the folks in the gold room. So I'd like to kind of just distill the main points down for you guys here on the YouTube. And that is the potential for a pattern change, right? So a couple points that I'd like to give you here. If you follow the green line, you see how on SPY here, not once during the rally has it ever broken the 21. As of yesterday, it did actually break the 21, right? So pattern change number one. Now, to be fair, it broke the 21 yesterday and it recaptured it today. So very good recapture by the bulls and extremely necessary capture by the bulls because you don't want to see two sequential closes below the 21. The second pattern change is right over here. So this is an ES 4-hour chart, and I'm just kind of using basic moving averages, which you don't need to pay attention to. Really, the only thing I want you to pay attention to on this chart is the lower indicator, the trend oscillator, and with the understanding that there's actually an arrow here to the upside that you can't see. But that took you, that up arrow, which got cut off on the screenshot, resulted in that move right there. The down arrow, which you see there, resulted in a down move to here. This up arrow, which happened at the tail end of October, resulted in this. And basically from the beginning of this box all the way through, so from the end of October to basically yesterday, this signal was in play and very clean. As of yesterday, we have a different signal on our hands. So as of yesterday, we actually have our first down arrow counteracting the up arrow that happened at the October lows. So does that change things? Well, it's a pattern change, right? Keep in mind, a lot of what we do is pattern recognition and pattern continuation. So the fact that the SPY has broken the daily 21 and certainly reclaimed it today, but just the fact that it broke is a pattern change. The arrow here to the downside, noting the crossover of the green line through the red line on this lower indicator that you're looking at, is a secondary pattern change. Is that enough? Well, not yet. All this does is it takes it from being in a strong uptrend to no trend, at least on the ES 4-hour chart. If we go back here to SPY, and we zoom in a bit, what is this doing? Well, let me actually zoom back out. So notice that I don't have a ton of levels on my chart, right, that I've actually drawn in myself. There's one level here at the previous all-time high, which is at 480, and then there were some projection targets up here, basically where we are, right? I want to point that out because, you know, there's not 300 different levels on my chart, and I'm just picking and choosing the one that is appropriate for the story that I'm telling you. And so now we have this box here, roughly from you know, let's call it 525 down to about, say 513 or so. So what is this telling us? Well, let me add an additional point here. So as I was doing the work with the folks in the premium room for the premium video, we looked at the interest rate, we looked at the dollar, and we looked at volatility, VIX. And for the first time in longer than I can remember, actually, those are actually skewing slightly towards confirming some level of potential volatility coming in. Now, how can we prevent this, right? What can we do here? Now, the main takeaway that I gave the folks in the gold room was because we're seeing some pattern changes, right, that we haven't seen before, the SPY breaking the daily 21, the trend oscillator on the 4-hour ES, which I just showed you, giving you the first red arrow since October. The fact that the dollar, bonds, and VIX are slightly confirming all of this. what do we do here? Because it's not bearish. This isn't overly bearish quite just yet. So what do we do here? Well, the takeaway that I had to give the folks in the gold room, and this is the same takeaway that I'm going to use myself for my own trading, although I am holding some swings into next week, is this is going to be day trading, right? What you need to see here is some level of stability re-enter the markets. And frankly, as much as I would prefer for it to go long, because I'm still carrying some swings into next week, so I'd like to dump those swings and then get short if that's what's going to happen. What you really want to do here is be as flat as possible to start the day, and then just embark on whatever journey that day takes you on, right? Because as you trade in this big box here, if you're trying to hold swing trades, let's say you're just swing trading the SPY, well, for the last 4 weeks or so, it's done nothing, right? So, you're trying to swing trade it, on up days you feel great, on down days you feel miserable, and at the end of the week you feel nothing because it hasn't done anything. So how can you take advantage of that? Well, when you put all the pieces together, you combine the fact that you're seeing the pattern changes, the fact that the VIX, bonds, and dollar are slightly confirming it. It makes the most amount of sense here to be mostly day trading until proven otherwise. And if volatility does decide to make a return, day trading will be very profitable if volatility does decide to return. So there's absolutely nothing wrong with that. One chart I do want to give you guys here, and I don't think I've ever posted this in the YouTubes, but I'm going to give it to you in the video description below, is what I call the Mag 7 index. Mag 7 or Fang index, I don't know. I can't decide what to call it. It doesn't matter. I'll call it Mickey Mouse. So I'll give you Mickey Mouse there in the video description. But you'll note here, this is the Mickey Mouse index. And it's Apple, Amazon, AMD, Google, Meta, Microsoft, Netflix, Nvidia, Tesla, and Broadcom. So some of the most important companies in the world, probably the most important companies in the world. And basically, it's about $10 trillion worth of market cap in one chart. And you'll note that as we look at just these companies, there's nothing wrong here, right? It's a max bull 40. Perfect score, and it has a big-ass squeeze. Big-ass squeeze being the technical term for this. The one thing I do want to point out, and feel free to, I'll give you this chart, I'll give you the index, just throw it into Toss, throw it into TradingView, whatever platform you use, and look at it with your own indicators and see if you can make sense of it. But the one thing that does give me a little bit of caution is that the fact that the squeeze is actually of the high compression variety. For those of you that don't know, high compression squeezes tend to be the most erratic type. So unlike regular squeezes, which tend to fire in the direction of the primary trend, high compression squeezes can be a little bit more, they can have a character to them, right? Where they actually are more likely to break counter trend than a regular squeeze. So that gives me a little bit of trepidation, but at the end of the day, I have to look at the chart for what it is until it's not. And this is a max bull 40 chart of the most important companies in the world with a daily squeeze at the daily 21. So until proven otherwise, it is a bullish situation, and I would approach it that way. But do understand that this week, for the first time since the October lows, we are seeing slight pattern changes develop in the charts. So all of that, to me, tells me to shorten my time frames, look for opportunities, and let things stabilize. Once the index is stabilized, then I can go back to longer term opportunities, which are likely going to be found in the FANG stocks. And if things don't stabilize and things start to break down, well, then I want to be in a position so that I can buy some puts and take advantage of that as well to the downside. All right, good folks, that's my time. Hopefully this conversation was helpful. We really just focused on the indexes and had a little bit of a chat around what we saw on the broader markets. And then I showed you this chart here. Remember to throw it into your own platform and come up with your own conclusions as to everything that I've shown you. But I'll be curious to know what you guys think. If you guys want to drop some comments down there in the chat, let us know how you're approaching this going into next week. Do you still see it as completely bullish? What are you trading? And we'll discuss all of that next Friday. All right, guys. Leave us a like before you go somewhere else on the YouTube, and I'll catch you next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.